Hello everyone. Today I will be discussing two charts, the NDX, the Nasdaq, as well as the Shiller PE ratio, both periods, the 2000s.com and the current price action. Start with the NDX. Very simply, June 2nd, AVGO reports earnings, and then had an exhaustion signal that day on the price, and it dumps, takes the index with it. And since then, this was the support it reached. Since then, the price has been consolidating on the top part of this triangle with a pivot at the apex of about $29,000. This apex happens to be on July 27th. It will happen on July 27th or July 28th. That's an important date to remember. Notice the price is distributing more near the top. There's a blank area here. We're not touching support that much. This can be seen as a little bit bullish, meaning the price is higher, but to some people it means it's top heavy and there is more selling or distribution happening at the top. At this point here, the price is showing an exhaustion signal on DMARC of 9. It will be perfected on this day. Today we're at signal level 2. So if the stars will be aligned correctly and we get a perfected sell signal on this day, then the resolution will not be up, it will be down. Many people are bullish right here because of this rising price following the big drop, and that's tricky. The big drop is only being recovered upward. It feels bullish, but it's a market trick. Eventually we're dealing with sell signals here. This is it for the NDX. We go to the Shiller ratio. Start with the older period. Here we had a parabolic move into the 1999, followed by a blip, followed by price action that was more convergent. Remember, with parabolas, you go like this against a vertical line, whereas on the next phase, the price was going against a flat line like this. It was convergent, and that's what caused the drop here, is that we reached a capacity limit at the very top. That's how it goes. So parabola, convergence, drop, very simple. The current period looks different in that we have an ending diagonal here. This is support, this is resistance. We have many points, tops here. This is, by the way, it's a logarithmic line, so these tops are logarithmic. They're very important. The next top will happen soon on July 27th or July 28th, exactly like the NDX. This is not a coincidence. This is programming. So that's the message I have for you, is that this important line is coming to an end very soon, and the confluence is with the NDX on July 27th, July 28th, and that's an important date. I expect the price to go down on that day. That's based on exhaustion and based on the Shiller PE ratio. Someone may say this is a VCP, which is a compression, volatility compression profile that may convert into a parabola in the end. It is possible, but the NDX is telling, and one can do additional analysis on volume to see how this is compressing. Just given where VIX is, all the compression happening, one would expect volatility to increase very soon, not to drop more. But this can be analyzed further, but there is a possibility, if this was a VCP, that this will go parabolic from there, from the peak. But that's not the base case right now, just given the volatility profile with VIX and given the NDX exhaustion signals. So that's the message for today. Enjoy.